I expect both of them to gap higher. There are two bullish plays I want to present. All right, and both of them are going to reporting earnings, and I expect them to gap higher. And so they're different industries, but they're both basically based off of the view that we have been collecting from the industry checks, and based on how their competition, based on how the other in the same sector have been reporting earnings throughout during the season. So the first one is ALB, Albemarle. All right, this is a specialty chemical company. This is a $10 billion specialty chemical company, and it will be reporting earnings on February 28th, which is, when is that? That is February 28th is exactly 1 week from today. It's Tuesday of next week, February 28th. Now keep in mind, on Tuesday, I will be traveling back from New York to Michigan, so I will not be in the chat room. Jay and Ava will be running the chat room, so I will not have time to cover this. But if you have any questions, you can reach out to them directly, but I will present my bull case over here. I think you should buy this as stock, or you should buy call options in this going into earnings on February 28th. All right? And I expect the stock to basically break out through this $95 a level and make a run towards $100 a level. Earnings actually February 27th. Let me correct myself. The earnings are actually on February 27th after market close. It is the conference call. The earnings conference call is on February 28th. The actual earnings will be on Monday, right here, on Monday, February 27th after market close. And so let's look at the technical side first. Long consolidation, 6 months of basically a beautiful consolidation for, basically for most of 2016. Then, right around election, it broke out through this consolidation. It came back at the end of the year and retested this, what was previously resistance area around $85 level. So it broke out after elections, then it pulled back on light volume. You see how the light volume, very light volume on this. It pulled back and retested the $85 level going into year-end, and since then it broke out again and took a new leg higher. And now basically throughout this little consolidation that has been taking place for about a month and a half, the RSI has basically neutralized, coming back to 51 level right in the center. The MACD has neutralized and the earnings are coming up, and I expect the stock to break out through this 95 and run higher. Okay, so the technicals is essentially it's higher highs and higher lows. So right here you connect the dots. Okay, so it's higher highs and higher lows. So I expect another leg higher is coming in the stock that's going to take it to $100 a level. That's on the technical side. On the option side of things, there's not a lot of activity in this that we historically see. Now, back in October and November, we saw some massive call buying in this repeatedly, and we discussed this multiple times. But that was, majority of it was focused in the month of January, which is now behind us, as well as some of it was focused in February. So those months have gone by, and they're already behind us. But nothing much since then. There's a little bit of option activity that was bought, mostly on the offer, that is built into this now, what is deep in the money, March 85 and 87.5 strike call open interest. There's 2,000 in each. So let's drill into this a little bit. If you go over here and basically you drill into this, you'll see that this was on February 12th, and this was on not February 12th. This was on December 12th and December 5th. This is March 85 calls we're talking about over here. Let me pull up the history on that real quick. So, all right. So we're going to go to December 12th, and we're going to look at March 85 calls. So here you go. So this is a snapshot from LiveVol. This is just one example, and you're going to see that this is December 12th right here, okay? And somebody came out and they bought over 1,000 of these, 580 and 582 contracts. 2 lot sizes went off, and they bought basically over, almost 1,100 of these March 85 calls deep in the money. near the offer, $9.10 and $9.20 near the offer when the bid and ask was $8.80 and $9.20. You can see similar kind of reaction that happened here too back on December 5th. And if you actually drill down into this March 87.5 strike calls, you'll see the similar kind of reaction basically in those months as well. So these are some massive bulls that are deep in the money, high delta bulls that are quietly positioned in the open interest. But aside from there hasn't been much activity in this in recent weeks. So, but previously it has been very, very bullish. All right. So that's on the option activity side. Now on the fundamental side of the thing, which is my favorite part. So let me show you something. Let me remind you of something that we discussed back in November. So here is my view. Let's pull up my view from November 29th. I think this is a view that is very this is a view that hasn't really caught up by many, and I think this is going to start to basically become more significant going forward. Back in November 29, this is a view I presented in the chat room. All right, and since then I haven't really discussed the stock much. First of all, we covered back then how strong the Q3 earnings was, 91 cents to 81 cents. There was a beat on EPS, beat on revenues. The guidance was raised, and then but the Q4 guidance was a small miss. It was mostly muted guidance. All right, but within this, there was a massively bullish view that I presented about the lithium outlook that I don't believe that anybody has caught up yet significantly. And in this case, this is what matters the most. Right here's the paragraph. On September 19, management presented at NDR conference in New York. Meetings focused on the specifics of the company's main project at Mount Marion lithium supply and the lithium demand drivers such as electric vehicles and stationary storage. By the way, you shouldn't surprise you, both of these, when it comes to lithium, electric vehicles and stationary storage, well, the biggest OEM, biggest buyer of these products is Tesla Motors, which is building the factory, right? The first shipment from the Mount Marion started in October 2016 with a project target of 50 KTPA at full production run rate, lithium carbonate equivalent to start by January 2017. And this is the key. If all goes well and successful, global supply will expand by 20% in 2017, a key driver of growth during the first 6 months of next year. This is the key right here. I don't know if many people caught it or not, but basically this massive facility in Mount Marion, they started production in October of 2016, all right, with a project target of 50 KTPA, and it went into 100% full production starting in January 2017, and it will now basically add 20% to the global capacity, and it's a key driver of growth performance going forward. When you have growth supply rising along with the lithium price rising itself, okay, essentially you have the best of the two worlds, because you got the price rising of the commodity itself, and you got the volume rising. So you get the revenue line basically gets a boost from two different angles, and that's basically a bullish case over here. Now this was on November 29th, right? So keep this in mind. It was on November 29th, and then let's go back to what happened after that. So let me pull up right here. Okay, so we're gonna look at the what happened since then. And here is ALB. No, first I'm going to show you. Here is the ALB view from on January 6th. Remember, I presented my bullish view on November 29th. On January 6th, a specialty research firm that basically pays close attention to the specialty chemical stocks, okay, called Instinet, presented on January 6th this view. ALB shares have been stagnant relative to S&P 500, blah, blah, blah. It goes on to, but it talks about strong pricing is a major catalyst for ALB, and this is a line. This is a long-term view. I understand that, but it's an important one because it hinges upon the idea of electric vehicle sales rising as well as stationary storage sales rising, which is the Tesla's view, okay? We analyzed ALB's growth project and associated EBITDA and CapEx schedule in this report. Our analysis suggests lithium EBITDA could approach $1 billion in 2021 compared to $265 million in 2016 with the help of price and volume. And I can tell you there's plenty of studies out there that basically prove that in the last 3 months, both price and volume continue to improve. I think that the $1 billion EBITDA projection that they put out 5 years out, I think it's going to happen much sooner than this analyst believes. Either way, 5 years or 2 years or 3 years, it doesn't matter. The point is the bull case has been set in place, and that's a 400% increase in EBITDA, which equates to more than 50% CAGR over the next 4 years. And I believe that in itself alone warrants a high multiple in the stock. So this was on January 6th from Instinet. Then Goldman Sachs came out, and this was on January 11th. Now keep in mind one thing, Goldman Sachs has a conviction buy rating on the stock. Goldman Sachs has a conviction buy rating on the stock, and this was on January 11th. And once again, it talks about the same thing. It talks about that the company is transforming itself increasingly lithium-focused company, which we estimate will represent 40% of ALB's 2017 adjusted EBITDA. This evolution was underscored in the last few weeks by closing of $3.2 billion sale to BASF, closing of purchase of Chinese, and it goes on, goes on. And here's the key right here. This is the analyst. Analyst name is Kaur from Goldman Sachs, and says we are raising EPS estimate for 2017 from $4.17 to $4.38, and the 2018 EPS estimates goes from $4.81 to $5.12. These are some substantial moves in the forward earnings estimates, and this happened on January 11th, all right? But here's the funny thing. So Goldman Sachs raised estimates on January 11th. Nobody has raised earnings estimates since then. Here is a Ameritrade view on the actual trends of the forward earnings estimates. We're talking about ALB over here. And if you look, 6 months ago, focus on the orange line, 6 months ago, about, call it about August of last year, the fiscal year 2017 EPS estimates was $4.01. Fast forward today, going into earnings, it's now $4.06. It's only moved up by 5 cents. Largely, the consensus has not moved estimates higher for fiscal year 2017. There's a disconnect in the story, in my view, because Goldman Sachs, which has been following the lithium story very closely, all right, Goldman Sachs, which has been following the lithium story very closely, on January 11th raised the 2017 EPS estimates to $4.38 versus the consensus currently sitting at $4.06. So that tells me 438 minus 4.06 divided by 4.06. The Goldman Sachs is almost 8% above the consensus view. And I got to give these guys the benefit of the doubt because they have a conviction buy rating. They try not to really screw their investors or their followers by putting conviction buy rating on stocks unless they really do have a conviction, high conviction on it. So, pretty simple view there. But anyways, based on all those things, based on what the rising lithium prices, based on prospects of improving sales through, through Tesla, which is going to be coming out with a Model 3 pretty soon, and all this stuff, based on the factory at Mount Marion that basically went into production in October 2016 and reached its peak capacity just last month in January 2017, which means that they're going to actually increase. Most likely they will actually increase the guidance. Based on everything that I've read, I think the stock has a very good chance of breaking out through this 95 and taking a new leg higher and going to $100 per share. So what is the trade over here? All right. I don't want to go with March this time because, in my opinion, you're going to start to fight theta decay in March because it is 24 days left in March, and the earnings are coming out on February 27th. So by the time earnings will be coming out, you're going to have less than 2 weeks remaining to March expiration, and I think you're going to start to fight the theta decay there. And so I don't want to go with March. So the trade here is go to April and buy straight. April 95 strike calls for $3.30 or less. The bid and ask are pretty wide here, 290 times 330. Okay, so buy straight April 95 calls for $3.30 or less. Okay, that's the trade over here. All right, so keep it very simple. No spreads because look at where the implied volatility is. You know, the earnings are coming out in March, and it's 31% implied volatility in March. And April is at 26%, June is at 27%, September is at 28%. I mean, these are very closely tied. There's not a big discrepancy in implied volatilities, and they're all sitting near historic volatility. So you don't need to do any spreads at all. You'd be better off just buying straight April 95 calls for $3.30 or less. Hold them into earnings, and let's see if this thing blasts higher into the space and goes to $100 per share. All right, so that's the play today. The second play I have is